This material has been reproduced and communicated to you by or on behalf of Deakin University in accordance with Section 113P of the Copyright Act 1968. The material in this communication may be subject to copyright under the Act. Any further reproduction or communication of this material by you may be the subject of copyright protection under the Act. Do not remove this notice.
Okay, let's make a start. Good afternoon, everyone. Welcome to week 9. And today we're going to explore a very interesting topic called fintech. Okay, and indeed, this is our final examinable topic. Next week, on our schedule, the topic is the ethics in finance. Okay, but this topic will not be included as part of the exam. So today, officially, this is our final assessable topic for the exam purpose. Okay. First of all, again, I really want to congratulate on your excellent performance on the quiz. So when I take a look at the result this morning, I'm really proud of you because you make the progress again and again. The average mark for quiz 3 is 7.8 out of 10. I can confirm this. And we see an even larger proportion of high distinction and even full mark. And so you guys make me thinking whether the quiz questions are too easy. Okay, so yeah, but I'm sure that you can achieve even better result in our final quiz number 4. And I'm looking forward to your great performance, the result by the end of the trimester. Okay. So today, as I already mentioned, the topic is fintech. So in the past decade, the 10 years, okay, so we see that the new technology, mainly driven by the computer science or data science, are reshaping our life, okay, are reshaping the landscape of a financial system. Okay, so when we combine the two words, the technology and the finance, when we combine these two terms, we have a new word or new term is called the fintech. Okay, and there's a disclaimer I want to make at the beginning. We should learn, we know that the fintech is a fast growing, exciting area, right? But we should properly learn the fintech, this area, from a whole unit rather than from a simple weak topic. So today, what we are going to do is we just want to explore the key substance, what we observe from the past decade, what's really happening in our market. How do we incorporate the latest technology into our financial ecosystem? Okay, so we only cover the key. We want to highlight those key substance underlying the fintech area. Okay, so by completing today's class, we look forward to achieving those learning objectives. Okay, so some of the concepts may be complicated or abstract, but I try my best to make it as simple as possible and maybe give you some example to demonstrate what is the key idea behind that concept. Okay, well, the topic is included in our final exam, but I can guarantee that we don't need to do any further reading. So understanding what we cover in today's class, lecture slides, is sufficient. It's more than enough. Okay, so I really want to make it clear at the very beginning. Okay, let's get started. Okay, so to understand, in order to understand the fintech and see how it works in the financial system, so I reckon we need to step back a little bit and understand, revisit the operation of the entire the financial ecosystem. Okay, so let's take a look at the big picture of our financial ecosystem. So here, while from the financial system, while we are not producing any real assets or real goods different from factory, manufacturer, right? So in the financial system, we are not producing anything new, real assets or real goods. But what we are doing here is the business participants are providing financial services to the customers, right? So on the diagram, on the left-hand side, on the first column, we have customers, right? And the business participant or financial institutions are located in the middle column, right? As you can see, as summarized by the diagram, what we do here is the financial institution or business participant, by completing the right-hand side column, by completing their internal operation, they try to deliver the service and providing financial services to those targeted the customers, right? As you can see, for example, for commercial banks, what they do is by performing their internal operation process, they need to make sure that they comply with all the regulation banking laws, and then they can provide those borrowing and lending activities. They take a deposit from household, from those surplus money, and then they write a loan to serve business sectors. Right? And similarly, for the insurance company, their key business is they identify those common risk area, right? And then calculate the probability of those accidents happening, and then calculate the premium and provide a insurance product to the customers, so that we can achieve the risk diversification across the entire economy, right? And here, the fintech is able to help the business participant and offering an even better smooth process and even refining their product and providing even better services to the customers. Okay, so to summarize the benefit by incorporating the latest technology into our financial system, there are three key benefits we already incorporated into the system. Okay, so the first one, it is all about the automation process. Okay, so nowadays we don't need to do most of the transaction manually. That is completely different from like 20 years ago when we haven't got a chance to reach the fintech stage. Okay, so if I recall what's happening 20 years ago when I was in uni, so when I pay like my mobile bill, I need to bring my bill to post office, standing in the line, just pay the bill. Okay, and nowadays the payment process it becomes much more facilitated, right? It's much more easier than 10 years ago. right? And thanks to the fintech, thanks to the technology advance, okay? So that is the first benefit we achieve by incorporating the technology into our financial ecosystem, okay? The second, the lower cost of information acquisition. It is all about the data, okay? So nowadays we have a database everywhere, okay? So every time we do a transaction, every time we use our app, okay? And the relevant data will be stored in the database, okay? And all the data, when we pull all the data together, that can help the business provider to, to facilitate their analysis and helping them making a better informed decision. Okay, so that is called the lower cost of information acquisition, and thanks to the internet, the technology. Okay, and here finally the third benefit we already incorporate by incorporating the fintech is that we have made all manufacturing and distribution process far more efficient. Okay, so with the latest technology, we can creating additional benefit by having even smoother across the entire value chain. Okay, and the financial ecosystem can incorporate the technology by using two main approaches. Okay, so here we are talking about from a big picture. How does the entire financial system ecosystem can incorporate the technology? There are two approaches the system can adopt the technologies. First, it is about the existing companies, existing players. Okay, so they can adapt to the trend by incorporating the latest technology, and hence they aim to provide a better service to the users, to the customers. Okay, so here the example could be like that is a clear existing the market participant, they embrace the latest technology and offering a better service to the customers. Okay, so like the retailer. Okay, so what they do is they find so many returns from their food product, and at the beginning they have no idea which steps goes wrong. Is that because of manufacturer issue, or is that because of the logistic issue? Okay, so then by incorporating the blockchain into the supply process, they can exactly identify which area, which step that can attribute this problem. Okay, so we're going to explain briefly what is blockchain very shortly. Okay, but for now, I think this is a clear demonstration. This is how we incorporate the technology into our business, the ecosystem. The first one is because of the existing users, existing the business participant players, they take a proactive approach by incorporating the technology into their operation. Okay? And the second approach is initiated by the newcomer. Okay, so the new player, they come into the industry, they want to compete with the existing players by offering the new idea. Okay, so things like the example could be, we have many different examples. Here we can think about nowadays when we do shopping, pay at a supermarket, right? So not necessarily we use our cash, not necessarily we use our bank card, right? So we can even pay our grocery shopping with Apple Pay, right? So by definition, Apple is not a financial institution, but they are able to incorporate the technology and make a better facilitate the payment, the process, the payment, make the payment process even much easier, right? And that is clearly the newcomer, the new business participant. By incorporating the technology, they are able to, do the business and compete with the existing the business providers in this area. Okay. And to summarize what we notice, what we can summarize about the key characteristics for fintech are following. Okay, so we can easily even use a simple letter A, B, C to summarize those key characteristics. Okay, so what are those key characteristics? The data capture. Okay, so it is all about constructing a big data set. So here the letter could be a B. Okay, so big data. That is all about the data capture. Okay, the data analysis is about the C, cloud computing. It's about the computing power with advance in computing science. Now the computer, we can execute complicated algorithm. Okay, so by working with a big data set and utilizing those complicated computer algorithm, we can perform the complex calculation, and from that we can make a better prediction, making better forecast to facilitate the business decision making. Okay, so second point is all about the cloud computing, etc. It's all about the computing power. Okay, so finally, intelligence. Okay, that relates to the letter A. What is that? That should be artificial intelligence. Okay, so which nowadays the machine is trying to learn by themselves. Example could be ChatGPT, right? So they can take a proactive approach to learn those relevant things, and then finally they can incorporate those the new things they learn, and then incorporate that into decision making. Okay, so the key characteristics we can summarize for fintech can be quickly summarized, simply summarized from letter A, B, C. A stands for artificial intelligence, B stands for the big data set, and C for cloud computing. We have a specific example later on we can share to show the benefit by incorporating those key characteristics. Okay, and now let's take a look at some specific example from the technology side that we indeed using some specific technology and make some breakthrough improvement. Okay, so the first one, not to mention, to learn fintech, we have to mention the blockchain or cryptocurrencies. Okay, so what is a blockchain or cryptocurrencies? The blockchain is indeed a foundation or a backbone, the infrastructure for the cryptocurrency. Okay, so essentially, what is a blockchain? The blockchain can be simply viewed as a collection of records. Okay, so all the records are linked to each other. Okay, so that explains the two. We combine two words here. The block means information or the record. The chain means all the information, all the blocks are linked each other. Okay, so by construction, the reason we introduce this blockchain is we want to establish a decentralized system. Okay, and hence the blockchain system is the underlying infrastructure for those cryptocurrencies. Okay, so in contrast to the traditional money or fiat monetary system, the benefit of using blockchain technology cryptocurrency is that this is a decentralized currency monetary system. Okay, so the problem they want to target or they want to fix is simply the printing money issue. Okay, so we observe that nowadays we are using a free floating exchange rate system. After the collapse of a Bretton Woods system, we mentioned that last week. Okay, so nowadays the central bank, whenever they have a crisis happened, okay, the only solution they have to overcome, to fight against those crises is printing money. So we're 100% relying on liquidity in order to fight against the crisis, right? And that means when they press the machine on, they started printing money, right? And from the long-term perspective, when we started the machine, right, and that is at the expense of purchasing power of the money, right? And it is the only central government that can do this, right? And at the expense of the household. right? And so from the macroeconomic perspective, that is the issue underlying the blockchain business, the blockchain or cryptocurrencies. Okay, so one of the argument those guys proposing is they want to have a decentralized trust system so that the government cannot easily manipulate the purchasing power of the currency. Okay, so that is one of the key idea behind the cryptocurrencies here. Okay, what is other benefit we aim to achieve from the cryptocurrency is that, so it is a peer the validation the process. Okay, so once a transaction is executed, okay, so the transaction will be broadcast across the entire network. And this transaction, this record will be stored across all the blocks, all the information blocks across the entire the blockchain, the network. Okay? And hence, once the transaction is executed, and nobody can adjust it, nobody can manipulate it, and nobody can even modify it. Okay, so that gives another potential benefit using the blockchain network because it cannot be manipulated. Okay, and we can also record all the transactions in real time and providing a precise the timestamp. Okay, and hence because it involves once the transaction is executed, it involves all the confirmation cross peer validation, right? And that makes the entire system is a security, introduce the security, strong security to the network. Okay? And essentially how it works is when you read blockchain or cryptocurrency articles, you probably heard of the miner, right? And that explains how additional new block or coin is created. Okay, so we mentioned that the central bank cannot reproduce or print money anymore, but how do we create the money or so-called money or coin in this system is like this. The miner, okay, they need to solve the mathematical functions following some algorithm. In the case of Bitcoin, the algorithm is called SHA-256. So what they do is they need to solve complicated the mathematical functions. So everything is relying on computing power. Okay? So if we are the first one to solve the function, so what we do is we're going to make an announcement and broadcast the outcome to the entire network. Right? And then the miner will be rewarded additional new coin or Bitcoin, or so-called the block. Okay? And then once we have a new block, we can utilize the block as a storage of new information. Okay? So all the transactions that will be stored is like the block is working like an accounting ledger. Okay? So that stores all the relevant information, and once the new information is stored, it's going to broadcast to the entire the network, right? And requiring the peer validation process. Okay, so that explains how the blockchain or cryptocurrencies works. Okay, in this framework. So as already mentioned, the central issue they want to fix is they want to establish a peer trusted the network without any manipulation because it's decentralized. Okay? But this is in the ideal world. Okay? But we still see a lot of problems even for the cryptocurrency. The most successful cryptocurrencies are the Bitcoin. Okay? So while they want to claim this should be the ideal currency, but we learn some interesting fact and the question whether this can be used as a strong currency. Okay, so let me just show you some issue we see here. Okay, so this is a new research article published by the Cambridge University Alternative Finance Research Center. Okay, so remember how is the additional new coin, Bitcoin, is created. The miner they need to be working hard and solving mathematical functions. Okay? So what I'm highlighting here is the total, the energy consumption allocated those miners' computer. Those electricities is consumed only for Bitcoin mining purpose. Just take a look at the figure. Okay? So the total energy or electricity we consumed, nothing else, just for Bitcoin mining, is entirely same as the total electricity consumed by the nations like Belgium, Netherlands, right? And you can imagine how much power, the electricity, how much coal we are burning just for this, right? And that is already a concerning issue behind the cryptocurrency industry, among many, many other issues. Okay, so that one is the latest issue the people are working on, the authorities are working on, and trying to find a solution for this. But it's quite concerning. Just take a look at how much consumption, the electricity we are burning just for mining purpose. Why we are burning so many electricities just for the cryptocurrency? Let me just show you this. Okay, so what I'm showing you first is like a benchmark portfolio. Okay, so if we invest in the market portfolio like a S&P 500 in the stock market, this is the overall return over the past 5 years. Okay, so on average, we are making like a 55% over the 10 years period. So on average, we are making like a 10%. Okay, so after accounting for inflation, the equity premium is around 8% in real term. Okay, so we see that number even over a longer sample period, and that number makes sense. And this 8% is called the equity premium. Okay, look, if I add the yellow line, the Bitcoin, into a comparison, you can see clearly, okay? Even the stock market can be hardly seen, right? What we can see is it's quite volatile, right? Do you want to really spend a volatile currency for your daily consumption? So today, a new car costs you 1 Bitcoin, right? Next month, you have to pay a coin for a burger, right? It doesn't make sense, right? So clearly, the people are using Bitcoin for speculation, right? And now we still couldn't understand what could be the economic factor that can contribute to this volatile, wild marketplace. But clearly, the Bitcoin, while at the beginning, the idea is brilliant. They want to establish a trust system without the, the manipulation, decentralized system. But the reality is that the volatility is too high, right? And people are simply using that for speculation, right? And that clearly contradicts to our original idea, right? Does that make sense? Well, we see some promising progress in the area, but it seems that we still have a lot of issues that we need to fix. Make sense? But we can definitely borrow the idea of the blockchain, this system, and utilize that to make a better decision in some other area. Because we already see that Walmart, the retailer, are indeed utilizing this network, the technology, to refine their supply chain. Okay, so we can use it because it is a cross-peer the validation process, right? So we can precisely identify which steps goes wrong. Okay, so from that perspective, it's really beneficial to any other to the business sector. Okay, but for the Bitcoin, the debate are still going, and we're still learning how can we regulate this market and make a better use of the system. But clearly, we're still confronting with a lot of problems at this stage. Okay. Next one is called ICO, or called initial coin offering. Okay, how do we understand this? Looks abstract. Okay, but if you understand what is IPO, then we can understand easily what is ICO, right? So recall what we learned from last week's seminar. What is IPO? This is fundraising. The companies, they are trying to raise equity capital by issuing shares, offer that share to the stock market, right? So essentially, the company is raising capital. The company can raise capital in the physical world, like in the stock market, or they can do it virtually from the blockchain system, okay, by issuing a coin. Okay, so the coin is, to some extent, is equivalent to the share, but these two terms are still quite different. From the share, we can claim ownership. We can participate into a general meeting and vote, right? But a coin doesn't give you that entitlement. Okay? The coin sometimes is called, they can create a token. Okay? So the token is something like you have an entitlement to share some potential benefit generated by the project. Okay? So say if Elon Musk has a new idea, okay? So the alternative way to raise funds is by issuing a coin, by selling the token to the potential investors. So once the business is generating money, then the dividend can be paid to those token holder, to the coin holder. But the token holder or coin holder, they don't like the conventional shareholder. They are not entitled to be an ownership, the owner of the company. Okay, so everything, what we are covering here, well, it is a fundraising by sort of virtually. So it happens on the network, the blockchain network. Okay, so as you can see, when the company raise funds from ICO, initial public initial coin offering, they can take money, the cash, the conventional money from the investor, or they can sell the coin in exchange for another, like a cryptocurrency such as a Bitcoin. So essentially, what they do is this is just an alternative, the fundraising channel for the companies. Okay, and here we highlight the key difference between ICO and IPO is that the ICO doesn't give the investor the entitlement for ownership. Okay. And now let's take a look at the impact of the fintech on the financial institutions. Okay, so the first one is how the lending, like a commercial bank, okay, incorporate the fintech, or how fintech is reshaping the commercial banking business. Okay, so traditionally, we always start from the tradition. Okay, so traditionally, if they want to borrow money, okay, so like a business, small business, if they want to borrow money, it seems that the only available source of capital is to talk to the bank manager, okay, and negotiate a loan, right? But nowadays, we have a new channel, and thanks to the fintech. Okay, so you probably heard of the P2P finance, peer-to-peer finance, right? So what is a P2P? Essentially is that nowadays we have an online platform. Okay, so essentially what they do is they have remember the key characteristic of the fintech is they have access to the big data set. Okay, so by having access to the big data set, they can do a precise profiling about a potential investor, borrower, and the lender. Okay, so they know exactly how much who are the potential investor, who has a surplus money in their account, and what is their spending behavior, what is their investment behavior. All the knowledge they learn is by having access to the large data set, the big data. And then they have a strong, superior, the computing power, they can make precise prediction or forecast. They understand the investor's behavior, That is the foundation. Okay? And then the online platform, okay? So they can pool money, take the money from the retail investors. So rather than taking deposit from household, they can issuing like the financial product, like a so-called, for example, P2P finance product. If you are interested, I promise you like a 8% per annum return, which is much better than the term deposit return. So I can pull up the available surplus fund from our customer base. Okay? And then I know exactly who will be the borrower. I understand exactly what sort of business they are doing and their spending behavioral and the revenue stream. I understand that. Then I can issuing a customer-made the loan and then provide money to the business sector. So essentially, the platform is like a middle guy. Okay, so essentially, what they do is they're transferring the money from the peer, one peer, so-called the investor, and then lend that money to the business sector. So that is called the peer-to-peer. Okay, so that is a reshaping. It's completely different from the conventional, traditional, the banking business we see. Okay. And just take a look at this. Amazon. Okay? They just got their new line of business. What they do is they're providing a credit to the customers. Why they are capable for doing this? They have so many the transaction data, right? So they deal with the customer, the buyers. At the same time, they deal with the seller, right? So they exactly know their profile. They exactly understand their spending behavior, they understand their business's revenue, right? So they can do a better risk management, the job, right? And then there's an opportunity for them to participate into this borrowing and the lending business, right? And this is a clear example how we incorporate the fintech, the latest technology, and participate into that, into our financial services ecosystem. The second area we also incorporate the fintech is so-called the asset management. Okay, so by utilizing the blockchain, the framework, by utilizing the latest technology, we can achieve a better cost saving. Okay, the first example is, if you talk about the shares, if you buy shares from your online broker, okay, so you should be registered as a shareholder. So what they do is after every time you buy a share, the broker will do the registration at so-called the share registration office. In Australia, it's called CHESS, right? And a few days later, the CHESS office will send you a letter, physical letter, telling you now you are becoming a new shareholder for this company. And if you sell the share a few days later, the CHESS office will send you a confirmation letter to confirm your selling transaction. You are no longer on our list for the registered the shareholder. Okay, you can see now everything is we need a third party, independent third party, as so-called a costing for this reconciliation process, right? It's going to be costly, right? So every time you buy and sell, they need to write you a physical letter for this. Okay, so by incorporating the fintech, we can definitely eliminate the independent, the reconciliation, the process. Because once we incorporate the blockchain, the framework, so everything will be broadcast. So once transaction is made, executed, we cannot modify the transaction. Therefore, we don't need the reconciliation process. Everything becomes the redundant. We don't need the costly process, right? And we can also utilize the technology and implement so-called the RPA, robotic process automation, and then we can utilize the machine to check the entire process and see if there's any mismatch or there's any human-made error. Okay, so here we see the fintech have been utilized, employed as a worker to reduce the cost, right? And then even check if there's any error along the operation process. Okay. And the next one, we also see the application in the funds management, the industry. Okay. Let's still talk about the tradition. Traditionally, if you talk to a fund manager, okay, so probably the first introduction when they introduce themselves is they're going to introduce their investment strategy, whether it is an active strategy or a passive strategy. Okay, so what is a passive strategy is that they believe the market is efficient, so the best thing we can do is by just holding the market portfolio. Right? So nobody can persistently beat market. Okay? So that is their thinking. Okay? So in contrast, the active manager, they want to take the active approach by doing the stock selection, constructing portfolio by buying and selling. Okay? So they believe, they trust that they have a superior skill so that they can persistently beat the market. Okay? So that is a traditional we can do. We can classify the fund managers into active fund manager and or the passive fund manager. Okay, and we can also have a fundamental versus quantitative the fund managers. So the first one is like Warren Buffett. Okay, so what they do is they only follow the value investing approach. They invest on the good company fundamental, but in contrast, the quantitative, the fund manager, they rely on their secret, the quantitative model for stock selection. But since after we incorporating the fintech, there is a game changer. Okay, let me just show you some example. You understand exactly what us fund managers is doing here. Remember the three key characteristics underlying the fintech. It's all about the data, right? Nowadays, it's already not new. Everybody knows this already in the industry. The fund managers, they try to utilize the new data set to explore the new opportunities. So what they do is they even utilizing the satellite data. They know that there's no exciting story from the conventional database, from the news article. There's nothing new. Okay? So the only new opportunity we can learn is from the new data set. And hence, they working with the satellite data. They monitoring the stockpile of the companies. If you are doing restaurant business, for example, they're using satellite data to monitor the car park, how many cars are parked in your car park. Okay? And they're using satellite data to trace the CEO's private jet. If a CEO are flying in and flying out a lot, that means the company is doing great. They're monitoring the stockpile, for the company, how many stocks the companies are holding. They're using those sort of the new data set to make an investment decision. That is a clear example how does the industry incorporate the fintech into their decision-making process. Okay? And clearly, the fintech is reshaping the industry. Okay? And here is how insurance industry incorporating the fintech, the new technology. Okay, so from this table, this can be easily understand. So the first row is all about the selling channel. Okay, so no longer the insurance company, they are no longer relying on the salesperson knocking on the door, selling the insurance, right? So they open up the new channels, okay, because they know exactly what is your profile. Okay, so they already can talk to the potential customer from the new channels. Okay, and then the middle row and the last row is all about the technology side, how to incorporate technology to better design their new product. Okay, so it seems that they incorporate technology along their value creation, the entire chain, okay, and to provide a better service to the customer, okay. So as already mentioned, this is a fascinating, the exciting area, but as we still see a lot of challenges, most of the challenge are coming from the monitoring side, okay, the compliance side. Okay, it seems that this area are still sort of an unregulated market. Okay, so unregulated the area, and that is why every year we see some prominent example, some famous or like a successful cryptocurrency exchanges collapsed. So the latest one would be the futures exchange. Okay, so SBI is the initial of the CEO of the company. Okay, so this guy will be confronting with seven criminal charges, including money laundering, security fraud, the commodity fraud. Okay, but in the past, we see many these sort of examples. So suggesting this area is a less regulated area compared with a conventional, traditional financial system. Okay, so if I can share with you the latest research. Okay, so published in one of the top finance journal, what they found is quite alarming. Okay, so they work with the earlier years of data, and they found that about a quarter of Bitcoin transactions are utilized engaging in the illegal activities. Okay, and while as soon as we have a new cryptocurrencies and those new illegal activities seem to utilize the even more opaque the area, the new cryptocurrencies, which is even more opaque than Bitcoin for engaging those illegal activities. So once again, it's showing us this is to be a wake-up call, right? So suggesting this area should be heavily regulated. So we know the original idea sounds very ideal. We want to establish a trust framework. But the reality is we still have a lot of a challenge and the difficulty to work with. Okay? So as already mentioned, today we only aim to explore those key substances for the fintech. Okay, so if you are interested, I strongly recommend we should take the fintech as a standalone unit in our second year. And from our Department of Finance, we have a fintech unit. But for this, at first year introduction level, first year undergraduate finance level, we only aim to explore those key substances underlying the fintech. Okay, so that's pretty much what we need to cover for today. And thank you very much for your attention. And don't forget, this Friday, the assignment is due. And next week, as already mentioned, the topic is not examinable. Okay, so what we do is we're going to have a guest lecture from CFA Hong Kong to share with the topic, share with us the topic on financial ethics. So we don't have a physical class, we don't have an on-campus class, so the class will be online. Okay, so we're going to have a Zoom class, but I really want to make sure that, make it clear that the next week's topic is not examinable. Okay, so today's topic is our official final topic for exam purpose. Okay, so thank you very much, guys, and see you guys in the seminar. I have questions? Yeah, sure. Yeah. Yeah, and also, yeah, in the world. Yeah, you can submit a program. The Excel will be like a supporting document, just in case we want to check the work. Yeah, I don't want to put it basically. It's like each part is like. And I want to now start watching the video. Like maximum 500 words. Yeah. Total of like 1,000 words. How is add up to like create total? No, don't worry about the total. Don't worry about this. 200. Don't worry about it. You just answer the question part by part. That should be fine.
You may have to talk about just the economic issue. Yeah.
Yeah. You need to download the data.
Data from the
Yahoo Finance. Yeah. General models. Use the ticker. Type in the ticker, and then you see you can locate a company, and then yeah. You go to the Yahoo Finance. Yeah, and just type in the ticker, and then click the. So once you're here, you just type in like a Tesla. Yeah. Yeah, you just type in here.
Yeah.
Yeah, and then you see historical data.
Yeah.
Yeah, and then you can download data from there.
Can I take the picture of this? All right. All right. Thank you so much.
You're welcome. Okay. Hi. Yeah. You just type in covariance. You can see those two functions. Apparently, we should use the sample one.
Yeah.
Right, and then you just highlight the data column. I don't know which return which suppose this is the first return.
Yes.
And then you have a second column of return. You just highlight that.
Yeah.
Yeah.
Yeah, I did that, and then it just comes up with NI.
Then that means you have some invalid observation. So you need to make sure that in this column you don't have any error. You don't have any NA here.
Now there isn't.
Yeah.
Because I used the Excel functions.
Yeah.
And there was nothing wrong.
That's strange. So let me just do some tests and make sure you have an equal observation.
Have you done the C? Okay, this one. How do you calculate this one? It's a standard deviation. Yeah, because when I checked for the lecture one, the way he did it, like he didn't kind of put everything together. He just kind of, I don't know how. I don't know how to do it, but I can't find the information. You need the standard deviation. Yeah, but we already calculated it. No, for the market. But that's on the variance, not how we did the calculation for variance. Yeah, that's for individual companies. Yeah, but that's, yeah, we have to combine those two together. Yeah, because if you do a math, you combine the two individual companies together. Because he calculated the data for GMs and
Yes.
stuff.
Yeah. Yes. Covariance. Yeah. Type in the covariance.
We have GM.
Yeah. Yeah.
Yeah, it's two companies basically. So
Is that a question you emailed me about?
yeah, I did. Yeah.
Oh, okay.
So
Yeah.
I use covariance.
Yeah. Click that. Yeah.
And then
Yeah. I apologize for missing the email.
yeah, that's fine. I think I already did it. Okay. I'm having an issue here. You know how you said you can insert Excel? And I'm kind of doing it. It's not letting me. See here? Oh, is it? Okay. Okay. And see, like for this one here, do we just have
deviation for the market return.
Market. So what if we go for standard deviation?
You have an S&P 500.
Oh, that's the market.
Yeah, that's market portfolio, right?
Oh,
Yeah,
okay.
yeah,
Oh, that one's the market.
yeah.
So that's an individual company.
No, it's 500 index, including the.
So all of
Yeah, we can use that as a proxy for the market,
Oh, I see.
right? Yeah.
What is that? S&P is not here. S&P 500 is not here. There's only GM and Tesla.
No. When you evaluate the beta, you need a market portfolio, right?
Oh, okay.
Here, yeah, we use S&P 500 as a proxy, as an approximation for the market portfolio. Make sense?
Yeah.
Yeah. Click zero.
Okay, I must just be not looking at it. Okay, I'll show you.
Oh, hi.
Like for this part,
Yeah.
our discussion have to relevant to like the COVID-19 pandemic. I will just discuss like stocks and bonds in general.
Which part?
This one. Like discuss the whether stocks and bonds are good hedge against higher inflation. Do we have to like relevant to like the COVID-19?
It's a country specific, right? So you need to discuss those relevant factors to Australia and to the US. Right?
Okay.
Yeah. Make sense?
Yeah.
Okay.
Can you instruct me how to download this data?
Okay.
Okay.
Download. Just click here. Right, and then you need to select the date.
Oh,
Yeah, you can select the date. Right, so you can, that's the starting point. Right, and then, yeah, and then you just download, hit download, and then you can see your data it should be somewhere.
Okay.
Yeah.
And one more thing I ask is about, can you look through my structure?
Like I can summarize key points finding from essays into Word. Like can we use like this way?
You better provide an Excel file, just in case we want to verify your calculation.
Yeah, we have an Excel file, but like in the brief, this told us to like summarize the key findings in Excel.
Yeah, you summarize, you answer the question in Word, right? And then submit the Excel file separately.
So we just like
You do your calculation in Excel, right? And then you can submit the Excel file.
yeah,
You can submit 2 files.
two Excel files.
No, one Word, one Excel.
Yeah, and we have done the analysis, but when it comes to the word, can we present like this?
Yeah, you can present like this.
Okay.
Yeah, and explain a little bit. Yeah, that's exactly what we are looking for. Yeah, the key parameter, what is the interest rate? Yeah, that's exactly right.
Yeah, thank you.
Thank you.
Okay, you're welcome.